Welcome to the daily update for Tuesday, January 25th, where we'll look at the action in the market today and then see how things look for Wednesday, January 26th. And it's kind of starting to look like a broken record right now. A lot of the charts really haven't changed. They show that we're in a continuing downtrend. The market tried a little bit of a rebound on Tuesday, but it just didn't materialize. We ended up closing down on the day. What's likely happening is the markets are waiting in anticipation of the Fed meeting today, not so much because of what they do, but because of what they're going to say. And we'll have to see. Will the markets pick up on what Jerome Powell says in his press conference and go to the downside or go to the upside? The market's going to do whatever it wants to do and then somehow twist whatever he says to justify their actions. Everything is pretty negative right now, but oversold on a short-term basis and even on an intermediate-term basis. And we're starting to see some warning signs that the long-term trend is showing some signs of weakness as well. Our moving averages and things that go a little bit slower, they're fine. But a lot of the oscillators and momentum indicators are really starting to show continued weakness. So let's look at today's action. But before I do that, I want to make an announcement. I started this in yesterday's video. I'm making the same announcement today. Starting February 1st, I will have my own private Facebook group going, and it's free to join. You're more than welcome to participate in that. It will be moderated, so I don't want a lot of ancillary type things or things that really don't matter. One of my big problems that I've had over the years with some of the bulletin board systems and discussion rooms and things like that is somebody will say something and other people will take it either out of context or twist it, and then they run with something that really doesn't matter and takes you way far away from what you're even trying to talk about. And I've seen this in many different areas. I really want to keep an eye on that and make sure that that doesn't happen. We want to stay on task. This is not a private group for self-promotion. Now, if you have knowledge and if you have things that you want to share, hey, that's great. But it's not a way to say, hey, I've got this great program where you're guaranteed to make all this money and all you got to do is listen to this guy and he's on Telegram or WhatsApp. That's just garbage stuff. We also want to avoid politics. As I keep mentioning, one of my degrees is in political science, and I've taught this for a long time, and I have a real interest in this, and I study it, but this is not necessarily the place to discuss opinions. We talk about what's happening and how it impacts the market, but to share if we think it's right or wrong in and of itself, no. We just want to say, okay, based on this, does it look like this is providing a positive or a negative backdrop to the financial markets? We want to stay focused on the S&P 500. We do want to have spirited and lively discussions, either in chat or, as I said, I can do live broadcasts. We can set up times where we just get together and talk about things. I can do some instruction. There are things that I can go over. So you are going to really dictate what happens in this private group. I do have some things that I want to go through, things that I want to share, but I want this to be a free area where people feel that they do have the freedom to ask a question that maybe they think is silly or something they don't quite understand, or if they want to stop and break something down and have a deeper explanation. That's what this thing is for. And then the best way to contact me is at john@spxinvesting.com. I've been hearing from some folks and some people are interested in this. There's really no obligation. It is free. So if that does interest you, please feel free to contact me. You can always get out of the group if you want to, but maybe give it a try and see what happens. And it will be growing over a period of time with the different kinds of things, because I really want to tailor it to you. I've been an educator for a long time, And one of the things that I found successful in educating is, yeah, there's basic information that you have to share with everybody. And the basics are the basics. And there are foundations and concepts that everybody needs to understand. When it comes down to you internalizing this information, it may be a little bit different for different people. You may like to read through things and just take that and make your own decisions. You may want to participate in discussions. Everybody's going to be a little bit different. Some of you might do this through reading, some through active participation where we have a discussion back and forth. So there's a lot of freedom and flexibility with how we can take this. So on Tuesday, we did have a negative open. Asia was really weak. And as I recorded the video for yesterday, I saw that we're not really weak necessarily right now. They're coming up to a big holiday time, especially in China. They have the Spring Festival and things are going to slow down a little bit. It's kind of like Christmas or the holidays are in the US. Well, things really slow down. We'll have to see if that has any impact on their markets, but they're not really that influential as far as the US markets are concerned. We do pay attention to Hong Kong and the Nikkei in Japan, but China, even though they're getting bigger in their stock market, they're not a real influencing market at this time. So what happened is Europe was positive. They had a fairly good day, but that didn't necessarily carry over into the US session. So at the open, we did have intense selling that continued, and we did hit a bottom at almost S1 on Tuesday. There were some buyers that came in. Now, a lot of people are saying, were these buyers looking to go long, or were these people just short covering? They were in short positions, which you get into when you enter at the ask price. And then when you get out of them, you have to go at the bid price, which is buy. I think I have that correct. But anyway, you have to buy to get out of those short positions, and that can drive prices higher. So it may look like we're having a rebound when really it's just people that were negative on the market taking profits. So some of those people tried to enter, but they could not push prices back above the unchanged level. We did get back up to that resistance level of unchanged, but then prices fell after that. In the close, selling did resume going into the close, and we closed at the daily pivot level. We were down 1.22%. We do have a short and intermediate downtrend. The long-term trend is still looking up, but starting to show some danger signs of rolling over. Volume was above average, and the things that the markets are fixated on are the Fed meeting that's happening on Wednesday. There will be the press conference after that, and everybody's going to be really in tune to what's being said. There are very weak technicals right now in the market. The rebound did not continue, which is what we were kind of hoping for. If you're more long the market, if you're more bullish, if you're bearish, you're happy right now. You're having a party. There are earnings that are coming out. There are real concerns about inflation and interest rates, and then the continuing geopolitical concerns, especially between Russia and Ukraine. So what can we say? Not much more than what I've been saying in some of the other videos. We had broad-based selling, and it continued in Tuesday's session. The market continues to be overvalued. If we really start to go down, then we'll probably see things get more in line as far as a valuation is concerned, but we're still way, way overvalued. The trend is negative and the bias continues to be negative. And remember, the difference between trend, it's a little longer term. Bias is more short term. If we have a down day, the bias is usually negative. If we have an up day, the bias is usually a little more positive, unless we're in the environment that we're in right now, where even an up day that we saw on Monday didn't do enough to really change the bias. So let's look at the day's session as far as sentiment. We're not showing an extreme fear reading yet, and we're pretty much in the middle right now. So this could turn and go back up to greed, but the scenario that looks like it's being played out now is we're starting to drop. but people aren't overly fearful right now. As far as the VIX, yeah, it continued to spike. That positive sign that we saw on Monday where we closed at the bottom for the VIX, well, that didn't really carry through. And we ended up closing kind of in the middle to lower part of the VIX on Tuesday. So it wasn't overly negative, but not necessarily positive either. But we're seeing a real increase in fear overall. It's according to the VIX anyway. As far as the sectors, most of them were down. We're seeing tech getting hit hard again, communications, discretionaries, kind of the usual growth plays really got hit on Tuesday. Energy was up a little bit. Financial sector was up ever so slightly. Some of the more value plays. And then across the board, this really isn't changing right now. We're seeing energy in the lead and then discretionary really having some trouble. As far as inflation, the BDI continues to fall, which kind of remains a mystery. Fed watch, yeah, there's a 94.4% chance that the Fed will not change interest rates at Wednesday's meeting. There's about an 88% chance that they will raise interest rates in March. So that's a little bit further out. We'll have to see about some of the economic reports that come out. If they start to show a trend towards weakness, then what's the Fed going to do? Because if the economy is starting to slow down, I've even heard some people talk about a recession. I don't know if it's going to get that bad. But what if we do go into something like that? What if the economy really does start to slow down and we're already at near zero interest rates? Well, that's usually the trick that the Fed uses to stimulate the economy. But if interest rates are already at zero, what, more quantitative easing, more monetary policy? Let's just hope that the Fed is not backing themselves into a corner. So we'll have to see what Chairman Powell says today, and if that gives the market anything positive to look at. As far as the May meeting, about even, and then into June, again, that still is being decided as we get closer and closer. Technical alerts, again, if you are investing in oil, you like that it crossed above 85. If you put gas in your car, you probably don't like that oil crossed above 85. And the energy sector hit a 4-year high. Those were considered positive. Again, if you're an investor, that's one thing. If you're a consumer, that's another thing. All of the other signals that were generated were pretty much negative. The S&P crossed below 4,300. And then earlier in the day, it had crossed below 4,400. The intraday chart, yeah, we gapped lower. I thought, just based on how things usually play out in the overnight session, okay, Asia was negative and that took the futures down. But when Europe became a little more positive, I thought that might add some support to the overnight futures. Well, that really didn't. So we gapped lower, went almost down to S1 on Tuesday, came back up to the pivot level, danced sideways. There was an attempt at a breakout where we broke above the pivot. We came up to the unchanged level. That didn't really lead to anything significant. So prices trailed off and we closed down at the pivot. So you can see how these lines really are important, and the algorithms and the computer trading that takes place, which is anywhere from 60 to 80% of what happens during the day. They figure all this stuff into their algorithm. So when these things happen, that's when you see lots of buying and selling going back and forth. There's really no change on our daily chart. We're still above this support, which is the October low. So that's pretty good, but we did have a down day. But we need to see a lot more buying if things are going to really improve. We're down about 9.18% now. Some other people are saying we're in correction territory. That's usually 10%. It's just a number. And so it's a way that the financial media can look at something and tell you something that may not be all that important, may not be all that relevant, but it's what they like to say anyway. Growth continues to fall while we're seeing a continuation of value showing some improvement. So that tug of war continues. As far as our trend, we are in a trend. We're coming off of the negative, extreme negative reading going up, and the extreme positive reading is pretty low. So the ADX is saying, okay, there might be some kind of a shift coming on. But if we do shift, that means that the trend will probably roll back over. As far as the breadth, we saw a down day based on price and volume. The ratio that we look at bounced up a little bit on Monday, but then dropped a little bit more on Tuesday. Pretty much with a lot of these indicators, if we have an up day, these indicators go up. If we have a down day, they go down. In our new highs and new lows, we did see a few new highs generated on Tuesday. That's a little bit of a positive sign, but not enough to really change the trend. Our short term, the 20 period moving averages still show weakness and are rolling over. Short term, we're in extreme negative territory. 50 period moving average, we went a little bit sideways, and we're still trailing off in the 200 period moving average. The one positive thing that I said in yesterday's video was that the S&P regained the 200 exponential moving average. Well, we lost that again on Tuesday's session. And volume, you can see here, it did taper off quite a bit. Some people, they're really nervous ahead of this Fed meeting of getting into a lot of positions. So even though volume was above average, it was lower than in Monday's session. The MACD continues to be negative and is pegged towards the bottom. The STO turned up a little bit based on price and is still going down based on volume. The McClellan oscillator, which had bounced a little bit on Monday, well, with Tuesday's decline, fell back down. And then I have switched this over to the short-term chart, the Stochh RSI. This thing bounces around quite a bit, but we're pegged negative. The rate of change, we're turning up ever so slightly with the 5. We're still going down in the 10. We're still going down with the 20. The 150 period moving average is still extreme negative, and the 200 is still registering down around extreme negative territory. Standard deviation continues to be pretty far away. This acts like a rubber band. This just means that where prices are at right now have deviated quite a bit away from their normal price. And you look for that to act like a magnet to draw things back. And the, the percent B, it rolled over a little bit on Tuesday. As these Bollinger Bands get a chance to recalculate, you'll see that we're coming off of the lower band just a little bit right now. This is the one that I changed from intermediate term over to short term. The Williams percent R, it bounced up a little bit on Monday, but with Tuesday's decline, it came back down. This is pretty sensitive to short-term prices. So that's why I've switched it over into the short-term camp. And some of these, just because I have them as short-term indicators doesn't mean they're not intermediate term, and vice versa. You can look at a lot of these different indicators and get short-term insight as well as intermediate and even long-term insight. So the 50 period continues to roll over. The PMO is going down based on price and volume. That's the same scenario we've been looking at here. The PMO turned up a little bit for the rising PMOs, but we still are falling with the number of buy signals, and those PMOs that are positive continues to fall. The BPI, bullish percent index, it continued to generate a few more sell signals. So this is really extreme. It's kind of a big deal when this thing falls below 50. Well, we're even dropping way below that right now. Our rainbow is starting to roll over a little bit as we slice through all the different colors. Short-term stochastics, after bouncing up on Monday, dropped a little bit on Tuesday. They're turning up ever so slightly in the intermediate term, but they're still continuing to fall in the long term. The vortex, the positive sign, turned up just a little bit, where we're going a little bit more flat with the red line, which is the selling line. Summation index continues to be negative based on price and volume. All of our momentum oscillators are negative. The Chaikin money flow, it fell a little bit on Tuesday and is still negative. CCI continues to be in extreme negative territory. The ulcer index, it fell just a little bit as it recalculates, but it's still pretty high, and also on a longer term basis. Copic continues to fall, and the longer term chart is showing that we're pretty extreme negative. The boom indicator, we're still extreme negative on all our different measurements. This bottom one, I wouldn't pay attention to this one too much. Again, this is more experimental. It's the top two that I'm really paying attention to right now. The Sean trend meter still is going into extreme negative territory. RSI continues to be extreme negative. The slope continues to be sloping down. Then here's the longer term basis. So yeah, we're more negative now than we've been in quite a while. The special K continues to roll over, and we can see that on a longer term chart. The ultimate oscillator bounced up a little bit on Monday, and it's showing just a little bit of improvement on Tuesday. And this is just a longer term view of that same chart. And then this is the Shond oscillator. I didn't have the label on this yesterday. This is just another oscillator that I've used over the years. We came down to an extreme reading and then bounced up off of that. Another one that I'm including for the first time, just because we're showing an extreme negative reading or getting to that point, is called the money flow index. Again, another oscillator that we use to determine overbought and oversold conditions. So now I'm keeping more of an eye on this. As far as our trading systems, the Elder system continues to be negative, and the SAR is also negative. Some of our different charts. The Heikin Ashi continues to show weakness. The Kegi chart, even though it blipped up a little bit, continues to have a red bar right now, so that's negative. The Kegi added another little box, so that's negative. The 3-line break is really kind of in flux right now as it figures out what's going to happen, but this is negative overall. The equivolume, because we had a down day, we have a red candle, and it turned up ever so slightly with the ease of movement indicator, but nothing really significant. We saw a little bit of positive forming on the point and figure chart. With things moving up, there were 3 new X's that were drawn with some of the advance. So that's a little more positive. So looking at this just based on price, this is showing a little bit of an improvement right now. Our long-term chart, both the equal weight and S&P are kind of moving in lockstep these days, with the overall S&P showing a little bit more weakness, a little broader based. Now look at the broad market. S&P is down. The mid caps were also down. Small caps, kind of the same scenario that we've been looking at now. Longer term view. The FANG stocks, they got hit pretty hard on Tuesday. After having a nice recovery on Monday, there just wasn't any follow through on Tuesday. Same thing with ARK. It had a fairly good up day on Monday. Well, it lost 3.73% on Tuesday. The industrials, again, we're kind of just floundering around here below the 200 period moving average and not really near any signs of obvious support or resistance for that matter. Same things with the small caps. They're starting to go a little bit more sideways now. That could potentially be positive if some kind of a base is forming. The mid caps, the same thing, possibly some kind of a base. The NASDAQ, this was what you call an inside day, where we had the big bar on Monday. Well, everything traded inside of that bar on Tuesday. So nothing was really decided. The hope was by the bulls that we would see that real continuation of the bounce from Monday. That just didn't happen. NASDAQ 100 also had an inside day, and really nothing was decided. Looking at the Vixen, again, I just love that name, where this was positive on Monday, where we closed at the low of the VIX for the NASDAQ 100. Well, we came back up and closed in about the middle on Tuesday. So the positive sign that I was pointing out in Monday's video, it really didn't carry through into Tuesday. The New York Stock Exchange, again, we're below the 200 period moving average and still falling below the pivot level for the month. Same thing with the Wilshire. So we're just kind of floating right now on a technical basis. I mean, everything is down on a trend basis, but if you're trying to find points of support, we're kind of in no man's land right now as far as obvious support. Here's the longer term view of the Wilshire. All stocks continue to be falling below the 200-day moving average, and we're starting to see the shorter term moving average roll over quite a bit. So that potentially could be negative unless we can find a way to bounce back above that. Then looking at our different world indexes, even though Asia got hit pretty hard, they're still in an overall uptrend. Europe is floating sideways to down. Japan starting to roll over a bit there. And of course, the US now is dropping below this blue line right here, which is also negative. Then copper continues to go sideways. The reason why I watch copper is so much of it is used to build things. And a lot of times they call it Dr. Copper, because if the economy is looking to improve, a lot of times you'll see that in copper first, where after the whole COVID plunge, well, copper had a really nice run and the economy seemed to be doing okay at that time. Well, we're seeing a lot of uncertainty right now. And with the interest rate situation the way it is, where we're not seeing real strong economic growth in a potentially rising interest rate environment. So that could really stifle the economy. And so you're seeing copper really going sideways. The dollar had a pretty good day on Tuesday. We're still below 96, but it's holding up fairly well, both on the daily chart and on the weekly chart. Lumber continues to fall ever so slightly. It's still very high. My goodness, if you're trying to build a house or a fence or just a bookshelf or something, try to go down and get some wood. You're going to be paying through the nose for that. Oil was up about 2.75%. It had fallen a bit on Monday. Well, it bounced back on Tuesday. Gold still, it had an up day, but it's still treading sideways. Silver also went sideways after coming off of the 200 period moving average. CRB fell, actually it was up just a little bit on Tuesday. And then here's our intermarket analysis chart where oil popped up. We're seeing stocks continuing to go down, the dollar going sideways, bonds trailing off, and gold going sideways. Then just to look at this, because Bitcoin is in the news so much, we saw a little bit of a bounce based on this end of day NYSE chart that I look at. And this doesn't pick up the overnight and weekend information. So we're having to just see what might happen there. As far as bonds, we saw a little bit of an uptick with interest rates on Tuesday after falling a bit on Monday. And then pretty much the same thing that we've been seeing in our different 10-year benchmark that we use to look at all the yields on the major markets around the world. And then bonds overall continue to fall. So what is our outlook then for Wednesday? The downtrend is still intact. We're on a short and intermediate term oversold condition. We do have the Fed meeting with the press conference afterwards. That'll come at about 2 p.m. Eastern time on Wednesday. We're still in the middle of earnings season, and we're still waiting to see what will happen in that whole situation between Russia and Ukraine. So the SPX is in a downtrend. That remains the same. On a short-term basis, we're negative. Intermediate-term basis is also negative and becoming more and more oversold. The long-term basis, although we're starting to see some things roll over in the longer-term charts, the trend does remain positive. So thank you very much. Have a really, really good day, and I'll talk to you again in the next video.